Thank you for your kind introduction. So yeah, the AML topic is important, and KYC topic is important. So I tried to talk to a few people here. And basically, as I understand, every one of you is kind of related with the compliance. So because we're a small group here, we can talk to each other. Basically, so I have before going forward, before the introductions and all this stuff, I want just to know, so okay, so I know that some people are working with the Forex, some people with the banks, some competitors of ours. So who is doing what actually? So who is working with the compliance here? All right.
Directly or
and directly and indirectly, if you're involved with the processes, is cool. Then with the product design and product stuff, business development or product development. All right, okay. Who is running the startup maybe? Because there's few people left. You're running a startup as well. Okay. And what do you do actually? In compliance, yeah? And you?
I'm publishing public relations.
Okay, cool. You will be publishing everything here. All right. Yeah, so my name is Liudas. I'm the founder of Ondato. So basically, what we do is we are facing the challenges that you're facing today. Yeah? So on the one hand, the banks, the financial institutions, the other online service provider that relates with the financial services have the demand to meet the client everywhere, anytime, and to ask the questions and all the stuff. On the other hand, the clients insist the same. Yeah? So to access the services from wherever they are and to do what they want with the financial services and all the stuff. The problem is that there was a big survey made by Thomson Reuters that revealed that large financial institutions, like having 10 billion revenue or more, spend around 150 million in average per year with the onboarding related procedures. Of course, the due diligence involved in this part with the data as well. But it still takes 32 days in average for the financial institution to open the business account. Yeah, so we have a really big numbers of the how much money the financial institutions are spending on that, but on the other hand, we still have this user experience. So basically, we came up with a solution that combines all the onboarding process with the due diligence and the ongoing due diligence. Yeah? So for the onboarding and monitoring and maintaining the client base. But I really don't want to talk about us. So it's just the final slide from our side, how we do now in the Baltics. We work with all the major banks here. Of course, we have lots of certificates and audits performed just because we work with the financial institutions. We're backed with by Wise Guys fund, and we were kind of acknowledged as the best fintech startup by the German Trade Council, or Chamber of Trade. Yeah. Okay, enough about us. Let's get back a bit to the roots, how it started. This is actually a line standing with the bank, and it's actually not so long ago, like 10 years ago, we all were in the same situation. So the only interaction with the financial institution was just a physical coming to a branch. At that time, I lived in London, and my daily operations, because I was doing business, so daily routine started the same. In the morning, I was going to the bank, giving the checks that I received from my clients, then pulling out the statement, seeing the transactions, who gets paid or not, online banking, booking some transactions, maybe filling the card, and all the stuff, and basically then going to the work. And now we kind of forgot all these things, but that's basically how it started. At the same time, the regulation that is now actually did not exist, because all the regulation was only focused on the banks and the credit unions. So in all the laws and everywhere, we had just described that if it's a financial activity, So it's designed by the bank or the credit union. Yeah. So and everything related with the money was basically for those two players in the market. But the client experience from that part, of course, was like it was. Yeah. So and we were used to it actually. So there was not any kind of question or issue. So how we interact with the financial institutions. Yeah. So and at that time it was normal to submit all the paperwork, all the stuff, like to answer all the questions the bank has, just by providing the answers physically, because the interactions with the bank were just ongoing day by day, or at least once a month when you get a payslip or something. It was funny because when I was leaving London already back to Baltics, they still had the checks paying possibility at the petrol stations, you know, and at that day I remember that at the Tesco petrol station they put all the notice that we'd no longer accept the checks for the petrol station just because of the fraud. Yeah, because it was just insane numbers there. Okay, and then something kind of happened. Yeah, so and it's really not actually long ago. It's like a 10 years period of time I'm talking about. And there was a change of the like old way and our interactions and the new way. And why basically it happened. So the first thing was the technology as such. So everybody in this room remembers the dot-com bubble. Yeah, so everything went online. From the information, so of course it started with the information, with the search engines and all the stuff, companies, establishment online, you know, different trades of domains and all the stuff, and then like it was a really big bubble there. And of course the e-commerce itself moved as well, because then kind of people realized that we can put all the goods we have or the services we have, we can put them online. And then it appeared that it is a gap between the goods and services and the financial sector, because all the goods were online, but basically to get those, it was really difficult. I believe that lots of people here do remember the SEB Bank Visa Electron. Do you? Yeah. Do you remember why it was actually made as a card? It's just paying online, because all the cards were not working online. And the bank had to issue the separate card that you could go and pay online. And the user experience there was like, okay, I found goods online, like on Amazon started, all the you know, big shops started, small shops started as well, and the PayPal started as well. And if I want to kind of pay with my existing account to someone selling the goods, so I had to go physically to the branch. Then it was I don't know how many of you had this card, but I was always like a bit of tech geek, so I had this one of the first guys. So I went to the bank and they asked me why I need this card. I said, I want to pay online. And they said, okay, so where are you paying online? You know, and I had to answer those questions. So I got this card, and then I could link it with the PayPal account. Then I could link it with the Amazon, and I could order the goods online. But the period of time, of course, when I saw the goods that I want to buy and that I could physically get them, it was like a week or something, because when I decided to go to fill in the questionnaire to get the card, yeah, then the card delivery was again like I had to get back again to the bank to take it physically, to sign for it and all this stuff. And the other thing is, of course, devices. Yeah, so the mobility itself, because first we started to interact with the internet itself was just the computers, yeah, so big ones, then the smaller ones, and then it all went to us, everyone in the pocket. So basically, the demand of having something was just like in our pockets, yeah. So if I would need some information or to search for something or to search for goods or services or to get like I don't know, ordering something, I basically can get it here. So because of that, new players appeared in the market. Yeah, so, and we are talking about this period of time, basically up to 10 years behind. Yeah, so companies like UCash, like voucher things, you know, that you can just go into the kiosk or something. Maybe you remember that you could go to kiosk to pay in cash, to get a coupon, then with the coupon to use that online to pay for these kind of goods. And lots of infrastructure behind the kind of either the cash, either the account, and the online business, lots of players established. And of course, so many different scenarios, so many different use cases, and total mess actually for the user, because you don't know what kind of payment method you will use in some kind of online store. And new products like alternative currencies, like you know, now we know that as the bitcoins and all this stuff, but at that time the electronic money as such was understood like not today, like, you know, because now the electronic money, everyone understands that it is the electronic money institution issuing the electronic money. But at that time, I think even here in Riga, I saw those terminals of the web money. So they were stated as the electronic money. Yeah? So you can just input the cash in, basically to get electronic money and to pay with these goods online. And of course, the key challenge was so that all this infrastructure faced that the regulation was still the same. And the new way of kind of currencies and possibilities to pay and the payment instruments are changing. And there was a really big gap in between the regulation and the new possibilities and the new economy that is going. So you remember that time, yeah? So and still all the infrastructure and all the legislation was built like for the banks and credit unions. So the new thing was the regulation as such. Basically, then we faced that we can have payment institution, electronic money institution. Now it is changing again with the, you know, specialized bank as a company. Now the crypto is being, you know, introduced and crypto exchanges as such in the regulation and all the stuff. Yeah, so basically the new trend of the new wave of changing the environment was the regulation itself. And of course, it changed as well the entry ticket to the market, because the financial industry before, as such, was really limited to just some kind of part of the society. Yeah, so the requirements to establish the bank was like you have to have the capital, yeah, and lots of capital, and you have to be an actually good person. Yeah, so you could not have the capital of the shady businesses or something. Yeah, so you had to prove that this capital actually is like, you know, a proper one. So this entry ticket, depending, it's an X just because depending on the level that you wanna kind of get involved with the financial industry and on the level of the license that you wanna get, because you can have the limited payment institution license that is, you know, for the local country and it's a really low entry ticket, up to the electronic money institution unlimited license, like it's 125K as a capital, or a specialized bank in some countries with a 1 million capital, but basically the entry ticket is really low end. Yeah, so if you actually want to build any kind of financial business, you can do that really having not so much money. Basically, everyone can do that if they want. And especially with the new type of licenses like payment initiation or account information services, it's even lower. And of course, with all this emerging demand of the access possibilities of getting it has this boom of what we have now, and that's what we call fintech. Because before, we didn't have this word as a fintech as such. So, and the kind of the main question there was always like, because, okay, I'll maybe touch a bit of another angle. So now when we talk about the compliance, we talk about the kind of requirements, yeah, so that the government or the legislation requires us to do something. But if looking at what happened during that time, so basically, it actually was the business insisting to have some kind of regulation that there would be still some entry ticket, because we all understand that the fraud risk and everything is just too high. And if the market will be not controlled at all, we'll have lots of problems there. So there's always a question, so who is leading this regulation? If the business is actually leading that, or the government? And now we see the change that actually just the government follows the business activity, how it operates, and then adapts to regulation. So that's what they call the RegTech like 2.0. Yeah. So, and that more and more countries are following. So I touched the historical part, and just to give the background of why I'm talking about that. And now let's move to more specific things. It's cases. I had to include first PayPal, because it's a really good example how PayPal moved from totally non-regulated emerging market of the e-commerce to the properly regulated financial institution that helps businesses or sole traders to sell goods online, to collect the funds, and also how they keep their customers basically secure in the meanings of funds. So this is a really good example, because they did not always follow the regulation itself, because when they started, the regulation did not exist as such. Yeah, so they were just a link between the banks. Because what they did, they were connecting the payer with the credit card, with another card, basically, or bank account, and they were building this bridge between those two. Yeah, so they did not do actually the KYC as such at that time at all. But how they regulated this, so basically they secured the payer by all the means. So if there is any fraud or something, or the goods are not delivered to something, they were just freezing all the accounts. And we had so many cases when PayPal frozen the accounts. You know, sometimes large ones, with a really good trader selling, I don't know, houses, you know, wooden houses online. We had really lots of these in Estonia, Latvia, and Lithuania that were just making those houses and shipping them to some Italy or something. And if there's some, I don't know, dispute or something, they were just freezing those accounts with like thousands of euros, and then trying to understand what is happening. And then doing the KYC as such. Then knowing who is the seller, what is the problem there, why, you know, there's a dispute. So their approach was that we just allow everyone to sell. We allow everyone to collect money from each other or to send money to each other. It's not a problem at all. But if there's any dispute in there, we're then, of course, taking care about, you know, that receiver part by all the means. And sometimes it was really, really difficult, because at that time we had the integrations with the PayPal. And I will tell you now another story. I included this because I worked there, actually. We launched Paysera in Lithuania. I wanted to include it here and to tell about our approach to the risk and to the management at that time, and on the compliance in general. So Paysera was started as company called EVP International under domain Mokėjimai LT. So in Latvian, it's the payments.lt, I don't know, so Maksājumi, yeah? So we designed that for, again, for collecting money for different e-commerce sites through basically the bank links, because we had a bit of different infrastructure here in the Baltics than the rest of the world. We had the card acquiring as such, but in our countries, in Lithuania, in Latvia a bit more, but in Lithuania only like 5% of people were paying with the cards. In Latvia it was like about 20%, and in Estonia it was like a 15% just paying with the cards. All the other people were paying with the bank links. Yeah, so, and the problem was that when you're making the bank link payment, so you cannot actually dispute that. Yeah, so with the card payment, you can like go for a chargeback, but with the bank link payment, you cannot do that because you're just confirming the payment and that's it. Yeah, so you're approving the payment, so nobody will get the money back to you. But at that time when we started, all the legislation, so actually when we started, there was no such a company as a payment institution. Yeah, so there was no such a license. And the license was introduced only in 2010, and then we just acquired that license like a first company there. And of course there was no regulation for this kind of activity, so we were just an information technology company. Yeah, so like creating the links between the financial institutions or whatever. And of course we did not keep money with us, so basically we were just sending the money to another bank. Yeah, and we were the people forcing the regulator to give any kind of regulation, because we had so many problems with the banks, you know, because explaining the activity, giving the answers, what we do, how we operate, and all this stuff. Of course with the customers as well, you know, because some kind of companies taking my money, bring that somewhere, I don't know that seller, and all this kind of stuff. So of course we had lots of internal regulation, how we check the websites that were trading with us and all this stuff. And then we decided that we want to move forward, so that we want to keep the funds with us. Yeah, so that we want not just to kind of transfer the funds to some kind of seller, but maybe we want to keep that funds, like to create the account and to maybe allow them to pay for those goods directly to some I don't know, other seller or wholesaler or manufacturer. And we were lucky because there was an idea of the electronic money institution as such, because of the part of the world. So we, of course, acquired the electronic money institution license then and introduced the service. But there was a really funny thing, because institution as an electronic money institution was established, but all the procedures and requirements remained the same as for the banks and credit unions. So it means that we operate fully online. We're a scalable business that can do whatever kind of we want in whatever part of the world we want, but we could not board the customer actually remotely, because in the laws it was written that we just have to have the physical contact. So, you know, the limitation of the business was really difficult. Yeah? And we were based in Lithuania and Vilnius. It's a small country anyway. The market is not huge. Of course, we had like, I don't know, 80% or 90% of the e-commerce sites from here, but still we wanted to operate more. So what we did, we started actually to open the accounts remotely. So we made our own technology there. So how we link the information with the Facebook, with the LinkedIn, with all this kind of stuff, how we gather the information about the customer, because, you know, the GDPR was not so much in there, so we really made lots of stuff there. And of course, we were looking at how the UK, in example, is solving those questions, how they are boarding the customers. So that was our kind of risk-based approach of how we can interact with the customers. And we actually knew that it's not compliant with the regulation. and then we got fined. Yeah, so the fine was not big, it was like 14,000 euros or something. But then, of course, we went to the court. We still did the same that what we were doing. And we went to the court, like, because, you know, it limits our possibilities to operate online and to do the business online. And what happened, that the regulator looked at the case, that what is happening, then looked how it is happening in the rest of the Europe, that the online boarding is a normal procedure, and they changed the law. So basically, when the court was finished, so the law was already established about the remote user onboarding and the possibility to do that. So that's the funny story about the Paysera. I wouldn't suggest to do that at the moment. So like to, you know, not to do something in compliant with the regulation and then like to try to convince the regulator that is possible. But at that time, it was just necessary for us because otherwise it would be impossible to do the business. The other example I have is TransferWise, or I could input the TransferGo because we had a speaker here. And in the morning, actually, he touched those questions really good. So I don't know how many of you were listening to Šarūnas in the morning, but basically, how they build their infrastructures. So the money, you know, TransferWise is the money remittance business. Yeah, so it allows anyone basically to come to the website, to book a payment to other person, doesn't matter where he is. And their value proposition is that the transfer will cost as low as possible and will be made at the speed as, you know, as high as possible. Yeah, so in the countries where they have the local infrastructure, so it means that local infrastructure, they have the local accounts within the country. So then it really takes quick time, basically up to 1 day, any kind of transfer will be made. And these kind of businesses was a wave, if just to look at the map, where these kind of businesses were mostly established. So basically that was the countries of ours. So like TransferGo is a Lithuanian company, just registered in UK. TransferWise is an Estonian company. Because we have a small market, we had a local currency, and the transfers were really expensive. Yeah, so how they looked at the question, so what they can change is just they tackled the one problem. The transfer is really expensive, and it takes a long time because it has to be made through the SWIFT transfer. Yeah, so they took this as a challenge for them, and then made this happening. And of course, at the very beginning, there was no KYC at all, as such. So basically, anyone could come to just the website to book a transfer, to link a card, or to make a bank transfer, and then to send the funds to another person. But because of the frauds and all the stuff, they implemented the solutions for the KYC. But again, the KYC there is made as under the risk approach kind of thing. Yeah, so basically, they started with just asking for the ID, just like scanning that and just gathering the data itself. Then when the fraud risk again increased, they started to compare with the face, you know, so if the person making the transfer is providing his own document. And then with other companies, they're doing the same at the back side as well. So who is actually receiving the transfer, just to make sure that this is, you know, the booked transfer relates with the performed transfer. Yeah, so and that's how they did it. But to understand, they're not doing the full due diligence of the customer or building big forms or something. They splitted that in separate steps, just to like get some info, like, you know, email and phone number. Then just, okay, give me what is your account, where do you bank with? Then give me like some more info where you're sending funds, and then they're checking all these parts if they're still, you know, if they will still perform the transaction, and at the same time they have limited costs on every step, because they're not doing the full due diligence of the customer and then saying, no, I will not send the money to that customer. Yeah, so they're doing that step by step, and only on the final stage when you just book the transfer, then they're asking the document. Yeah, so that's how they operate, and that is compliant, because they do the due diligence for the customers that are making the transfers. And for all the others, they're gathering the information and limiting the possibility to transact with in the stage where they decide that they will not transact with. Yeah? You get the point? And of course, the last one, I think they will be speaking as well, Dmitry, yeah, on the stage, is Revolut. Yeah, so it's for people from the banking industry, it's a really good example how basically to interact with the customers and how to have this like approach of the risk-based approach. Yeah, so they were not the first ones that introduced that, but they were the biggest ones and the most shouting about that. Yeah, so how the interaction with the Revolut starts? Does still somebody remember that? With a simple SMS message. Hey, just check it out. I have the Revolut. Check it out yourself. So it starts with knowing the customer starts with a phone number. Basically, that's it. Yeah, so when you press the button, they get the information, where are you from, what is your device, what kind of cellular network you are using, and you're confirming, like with this, you're already confirming the phone number that you're able to maintain. And then, when you download the app, they gather the basic information about you. Just a simple one, yeah, like name, surname, like the address, the complete address, and all the stuff. And basically, that's it. Yeah, so that's how you actually interact with the Revolut. What does it give to them is the fast user acquisition, an easy onboarding process. So everyone easily can interact with the Revolut without any kind of big like paperwork or something. And that was one of the key things actually, so why they scaled so quickly, because they had a really limited cost on that, and of course the user experience, yeah, because everyone was talking like, oh yeah, the banks are shit, you know, because they ask so many paperwork to fill in, and these guys are really great, they don't ask anything. But later, so if you're having this app and you're just linking the card, because there's still no risk related to that, so basically because you just link the other kind of account and not doing any actions, just paying for goods, and they're working like a bridge, like a PayPal, yeah? So they will not ask you anything because there's no risk involved in that. Of course, it's a question of, you know, sometimes the compliance officers has different opinions on that. But in general, it's like true, you know, because there's no risk involved. There's no possibility to use that account for any other reasons. So it's cool, you know, so for everyone it's okay. But if you're booking a transfer to another bank account, or you want to make some cash outs or to increase the limits or something, or to fill in, you know, from the other account, then you will be asked to submit a document. And that's how they build in the process of the compliance and knowing the customer. So it's totally separated step by step, risk-based approach from the, you know, from the actions that actually correlates with the compliance and with the risk itself. And this always, you know, I don't know, lots of talks about that. If this is good or not, if Revolut is doing everything right, and nobody can kind of confirm that. So maybe their compliance people or the regulators can confirm that. But it looks like it works because they're scaling really fast, getting new licenses. It means that the procedures are in place. But it helps them to grow really quickly. And of course, I have to mention some other type of examples with the same approach, the risk-based approach. Who of you knows this name? No? And it actually closed not so far ago. It is a company. It's I would call a mixture of PayPal and Revolut, basically. So they were, first of all, they were making those transfers in between the countries where the kind of merchant, I call this merchant because later it revealed that there were not so many merchants there. They were allowing the merchant to get the funds from another kind of country. Yeah, so it's like a PayPal model that you can just top up the account to send that to another country, like a low cost, but not low cost, because when looking at the pricing, it was quite expensive. And the other thing was that they worked with lots of alternative currencies. So they were allowing to top up the account with whatever currency you want and to basically cash out with whatever currency you want. So basically, it was just a network, a global network of money laundering machine, allowing you to send funds everywhere and at any time, because they were not doing any KYC at all. And the funny thing is that on year 2013, if I remember good, either it was 13, either 14, it was selected as the best fintech startup in Europe or something. It was like, because the competitors were the same, like PayPal. I think Revolut was starting that time. So lots of like TransferWise, and they were selected as the best ones. But they were not doing any KYC at all. So basically, everything they knew about the customers was just an email address, sometimes the phone number, but usually it was just an email address. And of course, the account or the card number where they're making the cash out. And this company was shut down by US government, and the charges were really, really big ones. You know, the Americans like that, you know, like money laundering, like pornography, you know, drug, all this stuff, you know, all the list. But it was really active and expanding everywhere. I think they acquired the one license in Sweden for European operations, another one in UK as well for the European operations. They had the Canada operations. They were selling US without a license. so doing lots of stuff. And now nobody knows this company, but they were doing really big job actually with lots of customers. So my output is there that we have to focus on the user experience, on the user acquisition, on how we interact with the users, and we can do the risk-based approach, but compliance is still the first place. If not because of the regulator, then just because of the fraud. Because the fraud is the risk that just actually the regulator kind of doesn't care about that. Because it's, you know, it's the business risk. It's just the loss of money. But it costs sometimes so much more that we can earn in like a year. Okay, and how much time I have? Fantastic. So we have new trends coming with the compliance. First of all is GDPR, still going. And we can think about that like in two ways. So either it's just a regulation, another one. And we had a joke there outside that GDPR and AML directive groups, maybe they're working in different buildings in Brussels because they didn't have a lunch maybe together, because you know sometimes it's when you're going through the procedures and it's just so funny. But we can look at that as the challenge for another regulation. On the other hand, we can look at the opportunity, because all the regulations are applied for everyone anyway. So either we can use that as an advantage, how to make it properly and user-friendly, either just to take that, oh yes, it's another challenge, it's for the compliance, you know. So it depends really on us. And especially the consent management stuff and everything there really needs to be improved in lots of financial institutions, so from our experience. And of course, another one is a new trend. It's not so active at the moment. It's just starting and just booming. And I think you'll have more discussions later on as well about that, is the PSD2. But again, when the PSD2 initiative was started, the banks were so much against that. Yeah, so we will not open the data, we will not do that and that and that. But when they saw how it's evolving and basically what could be the possibilities behind that, so then everyone agreed that maybe it's not so bad to open the account data itself, or to make others some applications maybe even much, much better than we can do from the user experience perspective, and others to make those operations basically from the user side, but for us just serving those transactions and to do the other side. So yeah, and the question is how we accept those regulations and the request for change. Thank you so much.
Thank you, Liudas, for sharing this. I have a question first. So actually, my favorite topic when I talk to my friends who are not fintech people is about AML. So that gets them really excited. And what I learned that 99% of the population doesn't know that AML rules exist, and they're really surprised when someone's account gets locked and they are not understanding how it's happening.
That's totally true. So I think like 80% of the answers in the KYC form, when there is a question, where do you get the money from, or where are you going to use the funds, it's like, it's not your business. So it's like everyone, because it's society, of course we have to talk ourselves more about that, and the banks have a lot of initiatives about that, about talking why the banks ask. Yeah, so, and I think that the fintech community has actually to do the same, because now the fintech community is playing a bit of game like, yeah, the banks are bad, they're asking, and we are not, but it's not true, yeah, so because everyone is asking the same questions, just sometimes in a different location. So it is the topic that I like to discuss as well, like, and to explain, so why the banks ask and why they need this.